Today we're talking about the SPY ETF, the world's largest and most traded exchange-traded fund. SPY manages over $573 billion in assets, and since its launch in 1993, it has been the go-to choice for investors worldwide. Right now, SPY is trading around $647 per share, which is very close to its all-time high. But here's the real question. Is SPY still the best investment option today, or is this turning into a potential trap? Let's break it down in detail. Part 2. What is SPY? SPY is an exchange-traded fund that tracks the S&P 500 index. That means it invests in 500 of the largest U.S. companies, including Apple, Microsoft, NVIDIA, Amazon, and Google. SPY is structured as a unit investment trust, which is unique because it fully replicates the index, holding all 500 stocks in the exact same weight. The tracking error is just 0.02%. In other words, wherever the S&P 500 goes, SPY goes. Part 3. How SPY makes money. SPY charges an expense ratio of 0.0945%. If you invest $10,000, you're only paying about $9.45 in annual fees. Now yes, competitors like VOO and IVV charge just 0.03%, which is cheaper. But SPY still wins because it has massive daily trading volume and unmatched liquidity with over 75 million shares traded every single day. Part 4. Current price and performance. Currently, SPY trades at $647.73, just a whisper away from its all-time high of $648.42. From February to August, SPY returned plus 9%. Year-to-date in 2025, it's up more than 10%. In the past 52 weeks, it has ranged from $481 to $648, meaning investors who bought the dip made massive profits. Technically, SPY is trading above key moving averages, momentum looks positive, and analysts suggest there's another 4 to 18% upside potential. Part 5. Latest news and market drivers. On August 27th, the S&P 500 hit another record high, and SPY mirrored that move. The Federal Reserve decided to hold interest rates steady at 5.50%, which is another positive sign for equities. The biggest driver is technology stocks. NVIDIA now makes up nearly 7.8% of SPY, and its artificial intelligence boom has fueled gains. Microsoft and Apple together account for over 13% of the ETF. Part 6. Risks of SPY. But here's the risk. More than 34% of SPY's weight is concentrated in just the top 7 tech names. So if Apple or NVIDIA stumbles, SPY could take a hit. Other risks include market volatility, higher fees compared to VOO and IVV, and structural limitations since SPY is a unit investment trust which cannot use derivatives and does not automatically reinvest dividends. Part 7. Dividends. SPY doesn't just offer growth, it also pays income. The current yield is about 1.11% with an annual payout of $7.17 per share. In July, the dividend was $1.76, and the next payout is expected in October. Dividend growth has been steady, averaging around 5% per year over the past 5 years. Part 8. SPY versus competitors. SPY is the oldest, most liquid ETF, perfect for traders and options players. VOO and IVV have lower fees and are more tax-efficient, making them better for long-term buy-and-hold investors. So if you're a short-term trader or options investor, SPY is king. If you're a long-term passive investor, VOO or IVV may be smarter choices. To wrap it up, SPY remains a cornerstone investment that gives you direct exposure to the U.S. stock market. Its liquidity, diversification, and track record are unmatched. But remember, SPY's future depends heavily on big tech performance and the overall strength of the U.S. economy. So, what do you think? Is SPY still a must-have in your portfolio, or would you rather go with VOO or IVV?